Today we're going to be talking about credit scores. What are they? How do you find out yours? And the good and bad factors that impact it. Welcome back to the Chris Chow Show. If you're new here, my name is Chris and this is my channel where I talk about personal finance, investing, saving money, career advice, and life lessons. It's also really important that you give this video a good credit score by hitting the like button and subscribing if you haven't already. So what on earth is a credit score? Well, it's a numerical score that represents how creditworthy you are as a borrower. Essentially, your credit score sums up all of the information that is in your credit report into one single number.
Wait, what's a credit report?
A credit report is a record of your credit history. It can include information on applications for credit that you've made in the past, as well as info relating to your history of repaying credit card debt, personal loans, and mortgages. It can also have publicly available information such as court writs and judgments related to bankruptcies, personal insolvencies, and debt agreements. Credit reports are prepared by credit reporting agencies, and in Australia there are three main ones: Experian, Equifax, and Illion. According to the Commonwealth Bank of Australia, credit reporting agencies look at the following: your past and present debt, including any problems you've experienced repaying that debt, loans and loan inquiries you've taken out for personal or household reasons, whether you're looking to buy, refinance, or renovate a property, as well as being a guarantor for someone else. It also looks at your credit cards and your store cards, your current credit limit, as well as any accounts that you've opened and or closed in the past. Jumping back to credit scores, your credit score will sit somewhere between a scale of 0 to 1000 and 0 to 1200, depending on which credit reporting agency you go with. It's important to know that each credit reporting agency has their own method of calculating credit scores, so what classifies as a good or bad score will depend on which agency you're referring to. But generally speaking, a higher credit score is considered better because it reflects a more reliable borrowing track record and therefore a lower credit risk. Now, I won't go into every single category, but for Equifax, credit scores range from 0 to 1200, with a score of 841 or above is considered as excellent. For Experian, credit scores range from 0 to 1000, with a score of 800 or above being considered as excellent. And for Illion, credit scores range from 0 to 1000, with a score of 800 or above being considered as excellent. Let's talk about some factors or activities that are good for your credit score. For example, you have paying bills on time, not applying for new credit cards or loans, paying off outstanding loans and credit card debt, making your monthly repayments on time every month, having a consistently low balance on your credit card, having an available credit card limit that is much higher than your usual credit balance, hanging onto good credit accounts where you have faithfully made repayments on time for several years. Let's switch over to things that are bad for your credit score. For example, applying too often for credit cards or loans, applying and being rejected for a credit card or loan, making late payments on your credit card or loan, bills or payments for at least $150 that are overdue by 60 days or more, getting a balance transfer credit card but not repaying the balance transfer by the end of the promotional interest rate period, and getting multiple balance transfer credit cards one after another. A very common question that people have around credit scores is whether checking your credit score will actually decrease it. Well, according to the credit reporting agencies, checking your own credit score doesn't decrease it because it's considered a soft inquiry and not a hard inquiry. A hard inquiry happens when a financial institution such as a bank or credit card company checks your credit when they're making a lending decision. So this usually takes place when you're applying for a mortgage, a loan, or a credit card, and you typically have to authorize them to do so. Hard inquiries can impact your credit score because they indicate that you are actively seeking credit. On the other hand, a soft inquiry occurs when someone checks your credit report for any reason apart from you making an application for credit. For example, you're just interested and you want to know what your credit score is. These soft inquiries are not taken into account when credit reporting agencies are calculating your credit score, so you are never penalized for checking your score. It's important to note that your credit score is not fixed. It's actually calculated based on what information is available at that specific point in time, which means that it can fluctuate as new information is added to your credit report. Which means if you have bad credit score, there are some things you can do to help improve it and hopefully get it up. Here's a few things that you can do to help improve your credit score. You can pay existing loans and debts on time, paying bills on time, thinking carefully before applying for any new credit, checking your credit report for any inaccuracies, holding onto credit cards you can manage, and lowering the limit on any credit cards you have. Now that you have a better understanding of credit scores and credit reports, you're probably thinking, how can I find out what mine is? Well, an easy way is to check with an online credit score provider such as CreditSavvy or Finder.com.au. Now, if you want a copy of your full credit report, you will have to contact Equifax, Experian, or Allianz directly, and they will have instructions on how to do so. You'll get your credit report either online or through the post. It's completely free to do because according to the Office of Australian Information Commissioner, credit reporting agencies must give you access to your consumer credit report for free once every 12 months. As always, thank you for watching, liking, and subscribing. If you have no idea what your credit score is, take this video as a reminder to check and find out. As always, an important disclaimer, I am not a financial advisor, this is not financial advice. This video and my channel is for general information only. As with anything in life, you should do your own due diligence and seek independent advice.